All right. Welcome back. Welcome back. Ken, how are you?
I'm good. That's as always. That music is great to wake up on a Friday early morning show.
Shut up. You've been up for like 2 hours anyway. I know.
Well, that's true. But when you wake up on a Friday and you're like, "Oh my God, you're doing an 8 a.m. show," you need that extra pick me up. So you not only have your tea or coffee, but now you have your 80s style montage. You can do a dance break in that 2 minutes beforehand.
We do need to work it into the universe better. But yeah, well, welcome back, everybody, to Creative Briefs, our weekly recap of the top news from the creator economy. Every week, we'll be bringing you a roundup of the latest news, commentary, interviews, some deep dives on key topics in the creator economy at large. We do go live on Fridays at 8 a.m. Pacific time, as Ken has mentioned, begrudgingly. And you can find out more over at created.show is the official show page. We do stream live on Facebook, YouTube, Twitch, and LinkedIn. And sometimes we do the audio, but for this show right now, it's a little complicated getting all the audio to work. So we're not going to do Clubhouse and Twitter Spaces today.
You want to juggle a few chainsaws, while we're at it?
Yeah, exactly. We also do have longer form content, by the way, over at createdeconomy.com. So that's our official show site. You can find show notes, transcripts, and of course, videos from our previous episodes if you want to catch up on anything that we've been doing. So Ken, I know we've got a lot of news to get into this week, and we probably should get going because I know we both got to jump to calls after. So let's do some of the bookkeeping real quick though. Yeah, Creative Briefs, as we know, on Fridays, 8 a.m. We welcome to, so this is what happens when you have to last minute duplicate the slide. It is not that time. But you can follow along over on Creative Economy on Twitter. That is our official Twitter account. We do tend to share our articles out in real time. But you can also follow us on YouTube, Twitch, Flipboard, and Twitter, all Creative Economy in all places. So feel free to give us a follow. We appreciate your support. It lets us know that you care. We'll get back to that in a sec. So Ken, let's get into the news a little bit. I know we've got a lot going on here. And,
absolutely.
Do you want to take us away?
Yeah, I will.
Let's recap real quick. We are going to test a different format now where we're going to kind of do a verbal recap of sort of our 5 stories each, and then we're going to do a deep dive. So just to set you up for what's coming.
Absolutely. And all of these links will be shared on Twitter. We're posting it on, as Greg mentioned, we'll be posting on Flipboard as well. Feel free to reach out to either of us if you have links that you'd like to see us discuss on air. More than happy to take a look at those type of things. So first of all, I'm going to get started with my picks of what happened in the world of the creator economy this week. So this one comes from reports that's saying that Twitter is working on a dedicated tab for super follows. So instead of having all of your tweets kind of just in one giant feed, for those that want to pay as part of this Twitter super follow program that they announced earlier this year, now you're going to be able to, supposedly, according to what some clever sleuth has found out, is that there's actually going to be a dedicated tab that you'll just have specifically for those that pay for the privilege of reading your tweets. So Greg, I don't know about you, but I mean, would you be willing to pay like $5 to read my tweets specifically, as a subscription? No, really? I guess, you can barely read my text as it is. So we'll move on with that. The next one here that we have is coming from TikTok. So TikTok has announced a slate of new features designed around improving the live streaming option for users. And this is not really surprising because this is something that you'd see with Instagram and YouTube releasing as well. The capability of scheduling events, allowing co-hosts, very similar to if Greg and I did this show exclusively on Instagram, Facebook, Periscope. Well, rest in peace, Periscope, but Twitter. And YouTube. So, and then you're going to be able to do Q&As and more. I mean, this is not surprising. This is great for what they're doing, and this is it gives TikTok a little bit more of an edge, or a little bit more of a momentum as it further competes with a lot of the big tech incumbents here in the United States. And you'll see this kind of see how important this will be as we get further along with this when covering the news. And now going on to news, Instagram. Instagram is going to say, look, you know what? TikTok, you announced all these features, but hold my beer. We're announcing something really special. Now, Instagram Reels, their TikTok clone, is now allows you to record up to 60 seconds. So this is a small little update, I mean, for Instagram, but it's actually a big sign, especially since on Facebook's earnings call this week, Mark Zuckerberg revealed that video was a big part of Facebook's engagement, in terms of their user engagement, and Reels is playing a big part in that. So this is going to be pretty handy for those that are fans of Instagram Reels. I'm not really sure if that's actually going to be a substantial game changer, but no longer are you going to be able to do 15 seconds, 30 seconds, but you can do up to 60 seconds, very similar to what you can do with Instagram stories. Now for some YouTube side of the picture, YouTube's has their earnings as well. Google has their earnings as well. And Google reported that they have their TikTok competitor, YouTube Shorts, is generating more than 15 billion views a day, more than double what they reported in March. So they're seeing a lot of pickup in terms of their TikTok competitor. And of course, what's kind of really fascinating, all this updates, whether it's YouTube, whether it's Instagram, whether it's TikTok, it can all be summed up with this information article where our dear friend Kaya Yuriev, who we very much source from a lot of our creator economy news from, kind of really put out this article saying, can TikTok be knocked off? And with everything that you see with Facebook, Snap, and YouTube, it's almost like she's theorizing probably no, it can't be. And it'd be very interesting to hear what your thoughts are in terms of whether TikTok can, be dented. Their momentum can be dented by what we kind of see as our incumbent social media platforms here in the United States. And Kaya's premise here is that with TikTok, the whole app is based around, this short form video, right? And Facebook, Snap, and YouTube, well, with the exception of Snap rather, but Facebook and YouTube, it's all part of a much bigger application, which hasn't, the foundation wasn't set around short form. And Greg, you pointed out earlier as we were kind of preparing for the show, and something that we brought up last week in Creative Briefs is that, the short form is kind of the new thing, right? The short is the new big, right? And this is kind of this is further evident that this is now the further movement down to ephemeral, abbreviated content as opposed to long-winded stuff that we're seeing. So next one here. Okay, we're done with TikTok, right? So let's talk about Clubhouse. Now the irony, is anyone really rushing to get into Clubhouse? This came out from Wired, and the irony is that we kind of ditched doing social audio this episode. And of course, we're talking about Clubhouse. And, Clubhouse is open for everyone now. You can ditch the invites. You can no longer, the value that you thought you could get for selling your invites on eBay or whatever for hundreds of dollars probably isn't worth as much anymore. And so third-party third-party tracking app, Sensor Tower, kind of came up with this interesting statistic that since the invitations, the gating has gone away, Clubhouse saw 484,000 new installs between July 21st and 25th. A 17% increase from a week, the previous 5-day period, and a lot of it comes from outside of the United States. Does that mean that Clubhouse is dead? Probably not. But I mean, does it bode well for the company, which kind of saw, I believe it was 1 million installs when they announced their Android version, while they were still having that invite only plan? Who knows? But of course, this is again beating a dead horse. It all matters. Is what Clubhouse doing defensible on its own as a platform versus having it rolled into something else? And you can kind of go back to what I was talking about with TikTok. Clubhouse's DNA has been around social audio. Facebook Spotify, Twitter, their DNA is not necessarily around, live audio, social audio. So we'll start to see, we'll continue to see more of these stories, and we'll continue to beat it like a dead horse. But hopefully Clubhouse's fortunes can be reversed. I'm sure they're not fans of this narrative, but time will tell to see what they do. And speaking of Spotify, hey, there's some news about their Clubhouse competitor, Green Room. Greg, I know you downloaded it. I know I've downloaded it. I haven't really used it. Of course, I see people on Twitter talking about it once in a while. But here's some updates here. Since they've launched, they have 140,000 installs on iOS and 100,000 installs on Android. So that's a good pickup for them. They still have a long way to go to kind of rival with Clubhouse and everybody else. But it's a good benchmark to see how well Spotify is doing in this kind of a new social audio type of space. So, and now for Greg.
All right. Well, sorry, I'm multitasking here, trying to get our other things up to date. But yeah, so Ken, just touching off, I think on what you were sort of mentioning about Clubhouse and sort of Spotify, I do think Twitter Spaces seems to be evolving rapidly, and I think in a meaningful and what feels like an intentional way. So they did announce a number of new changes, including that they're going to provide direct tweeting from a space. Previously, you had to actually have an existing tweet that you'd share into there. I think that's a huge win because I know for us, even operationally, it's a huge pain in the butt to have to push our tweets out separately and then go back in to try to share it. They're reorganizing the speaker list. And there is an API coming. And Ken, I'm not sure if you saw in the link there on the chat, but I did find one of the developers. Actually, I'm having a phone call with him. I think today, actually, on the API side. He's been live, sort of blogging. I don't know, it's not a blog; it's a Notion doc. But they've been having weekly spaces. We were talking about the API and working with partners to get feedback and talk about the inputs that they want. I think the API in particular, though, is the most critical and important part. And it's also, I guess, true to the nature of Twitter. But having an API around these services is probably the most standout capability that you could imagine. Right? One of the big frustrations for everyone who has ever had to try to schedule events on Clubhouse or any of these other places, for example, it's really difficult to manage. And I think for these tools to move into the business realm and get the pickup from the other kinds of users that these platforms are used to having, they need to find a way to sort of enable us to tool it the way that we would have previously.
And it's not as if Twitter is new to the API space. I mean, although to be honest, Twitter's reputation in terms of developer tools is kind of
is somewhat damaged.
Yes, very much, very much damaged. But
for you kiddies who don't know out there, a long time ago, Twitter used to have this extremely open API. It didn't have rate limits. You could do anything you wanted with it, basically. And then they slowly and surely start to co-opt a number of the capabilities, make them whole, make them their own, and then make them paid. Right. Yeah. And that left a bad taste, I would say, in many the developers sort of palates.
They even did a mea culpa at their developer conference a few years later.
Yeah. With Jack Dorsey. Had the developer conference once, right?
No, they've had it many times. But then
it used to be in that old building across the street from my house in SF.
You're right, but the last one they did was at the by Civic Center in downtown centers of San Francisco.
Sure,
but that was
the conference.
Well, they called it something else. I forget, Fleet or whatever. Anyway, no, sorry, that's their tool. Anyways, they have so many different names. But the point is, Jack Dorsey literally came on stage and apologized to developers and said, "Hey, we're going to go out and listen to them." They went and did this listening tour, and then boom, nothing happened, right? And they basically sold off all their developer tools. Mm-hmm. They still have developer tools. So they kind of did, hopefully they would have opened it up with their live video with Periscope. Periscope is shuttered, but they still kind of kept with live video itself. So, I mean, it's not out of the realm of reason to say that, hey, could Twitter Spaces open up an API? And I think that would have so much more potential because nobody has an API right now for live audio.
Yeah.
Nobody, social audio, nothing.
Without a doubt, the standout, and I think it could be the reason that they succeed over everyone else, right? APIs, are a fundamental capability, I think, in this domain, and not having it is just frustrating in so many ways.
Absolutely.
I granted it's a new space. I get it. However, let's remember all these services are built on APIs. So them not exposing them is just a choice, right?
Mm-hmm.
But going to our next article, so influencer marketing continues to grow vertically as well. And so there was some backlash and pushback years ago of like influencers asking for free stuff, right? Like, and this was like almost like a meme, right? To the point that like, I believe like it was a New York Times article maybe, or some folks were writing about like how like hotel owners were complaining about the fact that like all these influencers were coming or they were being bombarded by asking for free stuff. And then they weren't necessarily able to get like, any return from sort of that investment. Now, this company, Curiosity, I think that's how you pronounce it. Interesting news. They just raised $3.25 million. It's an extension round to their existing round. They've already raised like something like $10 million at over about a $25 million valuation. PS, that's not a great, your cap table may not be in great shape there. But one of the things that they did is they said, well, why don't we verticalize this process? And so let's make it a net benefit to hotels. And I hope, by the way, that this pattern repeats itself in other places. But what's happened is they basically get the hotel to agree to like a 70, 80% discount. The creator, who has to be vetted and approved into the program, actually will then get access to stay at this hotel, create content there. But then they actually invest some of that saved money back into promoting those posts. And what I think that's interesting about what Curiosity is doing is that, number one, they're pre-arranging sort of the discounts, but it's not entirely free. So I still like that there's like, again, to the idea of you being a business, there's a value exchange, right? Mm-hmm. But they are working specifically to take some of that money and invest it back in buying ads and boosting those posts. And if they take an 8% commission on the net new bookings that they generate, and because they're working tightly, it seems, with Facebook, they're getting a lot of data about whether or not, like, how effective these individual influencers are. Now, if they aggregate that data and they use it to provide like a better backfill or mindset around like which creators work well for certain kinds of venues, et cetera, they could be very, very interesting. But hopefully we see this applied to more spaces, because what, Ken, we know historically the rub against social has always been like, what's the ROI? How do you measure success? Even though, by the way, it is a far more measurable form of content than traditional advertising is, mm-hmm. right? We've still seen a lot of problems here. And I think like by tying and tightly coupling it to business needs and metrics, we're seeing something interesting happen here. So commendable that they're doing this. Travel obviously is coming back, or hopefully is back and staying. So we'll see how it works out. But interesting angle.
But could it be more about the term of that promotion, right? I mean, when you talk about like, hey, I can go to go to this hotel, it's like, hey, give me a free room and I'll for the night, and a free stay, and I'll post on Instagram and promote you. That is very, short term, very, very short term. That is for like, oh, that's a post or whatever, and then I as the influencer move on to something else, right? To the next whatever else tickles my fancy. Oh, there's this drink that I enjoy, this restaurant or this car service or blah blah blah, right? But if you're talking about with Curiosity, what kind of seems is like they're helping to extend that influencer program. And now I think with most, when you talk about it with influencer marketing agencies, like whether it's with like with Matt Zuvella's with FamePick or anybody else, like they're probably looking at something a little bit more long term, maybe like a few months of a campaign. I think the individual influencers, they're only thinking like, hey, here's my quick hit, and then I got to move on to the next thing and worry about where my next dollar is going to come from, right? So, but Curiosity is like, okay, we're going to help. Maybe this works out for both parties, right? If this takes off, where the influencer can have something that sustains them maybe a little bit longer than just that one post, like, oh, here's $200 for that one post or whatever that is, or that free room. But also that business, the hotel, the hotelier or whoever can say, like, okay, we're going to be able to milk this for an entire season and generate more business. And Curiosity is like, hey, we're making money either way, because we'll help. We'll take 8% cut of the commissions from any future bookings as a result.
Yeah, I don't know how long it goes for any of those details. So, I think we'll have to wait and see. Yeah. But let's move on to the next. My next article. while I think influencer tools are growing more verticalized, I think we are seeing a trend now, an increasing trend, where creator tools are going more horizontal. So this company, Lumanu, I'd never heard of them actually before, but it was amazing to see that they're raising a $12 million round. And basically they're building, financial tools, right? So they're in that, much like, say like Creator Cash, where I help run product. They're building tools to help deal with some of the financial tooling around the creator ecosystem. So their toolkit includes three primary things. A way to manage collaborations and splits, kind of like something you might see like Stir, I think, trying to plant their flag on. Early pay, which is a similar thing to like Chime and some of these other things, but like, there's a lot more uncertainty when you get paid as a creator, because you can have 30 to 90 day terms oftentimes on when your money will hit your account. For example, Creator Cash, we offer instant cash, right? A very similar concept where you can get access some of your earnings ahead of time. And their third thing is as a payments platform. So, these are sort of like standard things, kind of like a Square Cash or something like that, existing and sitting on top of, these services. I think it's interesting to see that there is more and more viability in this domain, as again, when we look at the the spread and the gradient of tooling required for creators to be businesses, these types of tools exist, right? In the SMB world, we are now starting to see the analogs of these starting to be recreated, re-envisioned, or reimagined sort of in the creator universe. So, good luck to the Lumanu folks. It's great to see others helping creators get access to the money that they need to be successful. Going to our next article, in the same vein of tools growing more horizontal, and I guess like also vertical at the same time, Norby, another company, $3.8 million raised in the new round. Matt actually and I were chatting about them, pointed out that, this is the first time we've seen an investment from Gradient, so in the creator economy in a while. So it seems like Google's getting back in the game, maybe potentially. And what Norby seems to be doing is a verticalized marketing stack. So I feel like this feels a little bit more like a ConvertKit or something like that, where they're providing kind of like email marketing, a link in bio, of course, right? And I forgot what the other thing is. I think it's like sort of like a CRM campaign thing, but basically they're trying to integrate the marketing tools. Oh, here it is, Linktree.
Eventbrite and MailChimp, yeah.
Right. So events, presence, and email / data, like CRM, basically, right? Now, what I thought was interesting personally was that they are adopting a SaaS model, right? So they're and this is a debate that we've been talking about, right? About like which model is the best, but thanks for getting this quote here. Actually, Ken, they're saying for brands it's $20 per month. And kind of plans and works for $5 per month for individual use cases, right? So again, is there a reason that creators should not be investing and buying tools to make their businesses better? No, right? Are most of them there yet? No, right? What's the right price point? I think like $5 a month is a very interesting place. Like Canva got really, really big with the $5 a month plan, right? And so I think we're going to see more and more. And it's interesting because before Canva, like for example, like we didn't imagine tools with millions of paying users, or at least not business tools with millions of paying users, right? Like you tend to send in the enterprise, maybe SMBs was the only place that this was there. But a lot of like the tech industry didn't talk about SMBs, right? Like we tended to talk about, like mid-market companies, enterprise companies, right? Or consumer companies. And so this is a good, interesting hybrid, I think in the area or the arena. So that was Norby. So again, the toolkit for creators definitely expanding, and I think both of these are either commission or SaaS. So it shows just kind of both business models in play. On to the next article, though. A couple other articles. These are somewhat interesting, I think, because related with growing and becoming established as businesses is also becoming litigious. And so. This was an interesting one, and it also shows some of the plights of creators. This article is actually about OnlyFans, and OnlyFans creators suing her managers. And one of the, a few things here, right? Like, obviously, I wish Matt was here to actually add some commentary to this, because having bad representation is bad everywhere, right? So having bad representation as a creator, par for the course, right? Like, again, into my normal domain of This isn't special, right? Like it just looks like what everything looks like when it's early, right? But I think when you think about this, this creator, she's suing her managers because they were taking like basically full nude photos or something like that and then distributing them. But more importantly to me, what I found most egregious was, and this is a situation that no creator should find themselves in, she had no control over her payment accounts, right? Like, so the money was being deposited into another place, or sorry, not full control. I guess like ultimately you need to create the space where you are in control of your payments accounts. And then you have commissions that need to be paid out. They should get paid out after the fact, not after hitting your bank account, not before hitting your bank account, right?
Actually, they wouldn't even given, she didn't even know about it because the payment settings were changed without her knowledge, apparently.
Yes, absolutely. No, well, and that's right, because like the way, and again, this is an evolution and sophistication problem for the platforms. They don't necessarily have enough roles built into them to like allow for the fact of like, say, someone to be your manager, right? Which is different than say an admin or editor or moderator, right? Like there's other roles as the business cases evolve for creators to provide different sets of permissioning inside of these accounts, right? And so hopefully YouTube and these other platforms are listening, because these are the kinds of things that we do need, right? Or ideally, honestly, the platform should provide the ability to handle splits natively so that YouTube can just push the money to the right people, for example, right? And let us articulate the terms. So that was an interesting thing. But on the flip side of that, Ken, we also have this TikToker who's being sued because he likes to go on do rants. And, I think this is kind of, bullshit, honestly, if you ask me. But, he did a rant about how, he dropped his car off to have a Tesla off to have it detailed. Comes back, the flash drive that basically is used to store your videos, the camera videos was broken in half. Who knows how it happened? Either way, he goes on TikTok, does a huge rant to his 3 million, almost 4 million followers. And now the company's suing him for defamation. It's $1 million plus that they're suing him for. And, who knows where this is going to go? He says he's going to countersue. My guess is they're both going to end up shutting up about it, right? But interestingly enough, it does say that as you have reach and attention, also don't forget that has implications, right? And not enough of us necessarily always wear that business hat. And so sometimes, what got you where you are can get you in trouble where you're going, right? And so I think it's just an important lesson to be learned in the process. And so I hope take heed that this can happen to any of us theoretically. And so, it doesn't matter that you have the freedom to say something. You can still get sued, and it can still cost you a lot to fight your way out of that situation. So just be careful out there. So that's our news. This is our new format. I hope you like it. We wanted to try to cover a little more commentary, but also get through still the same kind of volume of stuff, but also we're packaging it hopefully in a little bit different way. If you prefer this format and you're watching right now, we'd love to tell us in the comments. Was this like an improvement over how we were doing it in the past, or is it, what else should we tweak? We'd like to know. But let's move into the deep dive now, Ken, because I know this week we wanted to sort of dive into some other topics.
Absolutely. I mean, Greg, the creator economy is so new, well, relatively new. It's like, I don't think we've ever seen, a report about, creator earnings. I mean, nobody's ever talked about creator earnings, but apparently here we are. I'm totally jesting. This is actually coming from an influencer marketing agency, Neoreach. They published this earlier this week they broke down creator earnings. And this has some interesting statistics based on what they found. And we'll just kind of scroll through. It's a relatively quick read with a lot of graphs and everything like that. But I think let's focus on there's 7 key takeaways here. Namely, I think, which is perhaps the most interesting for me, is that when we talk about the startups, and Greg, you covered a couple of them already, and we've talked about a bunch more startups that have raised money. Actually, the creator economy startup hasn't really gone full unicorn yet. They've in totality right now, since October 2020, these startups have raised $800 million in venture capital. And this is, I mean, I don't know necessarily that's a good thing or a bad thing. I mean, Greg, you've obviously been in that space more than I have, more on the front lines of that. One thing that I will point out is that we are not seeing the massive investments.
And by the way, Ken, this number is old, because I think as we covered previously, That number, it may have actually gone to like 1.2 billion, over $1 billion already.
We have hit unicorn status in terms of the creator economy startups. I don't know. I just might as well say
on that side, sure. I think so, yeah.
But I mean, we haven't seen the exorbitant funding of startups in the creator economy space like we would normally do it, like we typically have seen in tech, right? I mean, you're not seeing people dumping billions into like the Quibi of the creator economy, or Color or any of those type of things.
So, I mean, classic gold rush model though, right? Like, right. We see this often, right? We've seen it in the past with AI and every other sort of verticalized technology or sort of horizontal technology. Certainly does attract a lot of people. I think, and someone made this comment, I think once, Ken, like it was just interesting how much was being invested in these startups. And they were sort of pointing out that, but how much is being invested in the creators themselves, right?
That's true.
So I think there's an interesting thing, but I do think like that this provides, at least the startup investment side, at least provides an interesting pathway for like creating more scalable creators.
But Greg, to that point, do you believe in pardon this phrase, but like this trickle down type of creator economy, right? Where you have the VCs putting in millions, if not billions of dollars into startups. And then that kind of moves down to somehow the creators that are on these platforms somehow benefit as a result of it. I mean, it's obviously, again, it's too early to tell, but is that something that people are thinking about?
Yeah, so I do think so. Right now, here, let me explain why, right? I think scale is a thing that takes repeatable patterns and makes them more efficient, right? And I believe that is true for businesses as well, right? So for example, like creator businesses, or as our friend Joe Pulizzi, just a phrase that I like, content entrepreneurs, right? Mm-hmm. For us to build scalable businesses, content entrepreneurs, right? We need to adopt business practices. We need to adopt procedures. We need to find efficiencies, right? It's not you can't necessarily, and I say necessarily, automate the creativity, but you can automate a lot of other things that take up time, right? And so I believe that the investment in the tools is on multiple fronts, obviously, right? Like, I think some of it is oriented around providing operational efficiency to creators, right? So we have a whole bunch of people in the ecosystem building tools to give efficiency, operational efficiency, like operate better, like take away a lot of administrative things, et cetera, right? There are people like our friend Dimitri there who are helping to create surface area, new revenue surface area, like new opportunities for revenue, because the number of revenue streams opportunities, right, or number of revenue opportunities for creators, while they're fairly diverse from an entrepreneurial point of view, there's not a lot of breadth inside of them, right? Mm-hmm. Like so like you can work with brands, but the number of ways to work with brands, right, like is infinite almost, but it's not formalized, right? And so like we see technology companies coming to formalize that. Other people are just on the product production side, right? Like we're just building tools to help you produce and create and deliver that content in better and more efficient ways. And then of course, there is the growth side. Like, so you have all these tools building things for like marketing and sales and all these other things that creators also should be doing. So I absolutely think you need a strong foundation of technology tools, services, best practices, et cetera, to be built and informed to help creators scale to those heights. Right? Now, last week we were talking about Fiverr, right? Mm-hmm. Absolutely. There's plenty of reason to hate Fiverr, right? Or complain about Fiverr or feel like it's doing bad things to the world. I get that, right? At the same time, how many people wouldn't be able to find those opportunities, or how inefficient would the process of finding those opportunities be if Fiverr didn't exist, right? Or Upwork or any of these other things. And so I think like you wouldn't have these people who actually have like sustainable careers. Now, whether or not they're fair, and good, like we can have a separate argument about. But how many people wouldn't even be able to have these opportunities if those kinds of platforms didn't exist and the tools didn't exist? And I think that's what we have to get to, right?
But let's toss a little bit, change it up a little bit, right? I mean, you're talking about this report is talking about obviously startups.
By the way, this report, it should be clear, Neoreach tends to be very Instagram oriented. So the caveat I would put here, right, is that most of these numbers, I would say, highly represent sort of like Instagram style creators, not necessarily, not all. What does it say? 72% of the creators in this study actually list Instagram as their primary platform.
Right.
That is not true for the space, I would say, right? Like, so just take that with a grain of salt.
Right. But I think let's talk more in generalities then, as opposed to, but I mean, but there's something about this report that I kind of wanted to highlight in terms of, you talk about with, let's say, over $1 billion has been invested in creator economy startups. And if it does trickle down where VCs invest in the platforms, in the products, or in the companies, the tools get better, the creators create better. Does that also carry with incumbent tech companies, with big tech, right? So you're talking about here, this report is saying, for an additional point here is, for over more than 4 years on the platform, 46% of the creators earn over 20,000 annually. That's a paltry sum, right?
Absolutely.
I mean, and if you're talking about how, this trickle down where, hey, I'm using company X to grow my audience, and I have a 1 million followers there, right? And they're getting like $50 million in funding. I'm not really making any money off of my views or off of my work. How is that fair? Right. And of course, we see this all the time with big tech, with not look,
fair,
I mean,
fair is probably not the right,
or equitable, right? I mean, how is that?
But here's the thing. So, and this is the classic discussion we've sort of been having. You're not deserved of an audience.
Right.
Right. And without an audience, you don't have something to monetize in the current regime. Right. So the pre-existing world of like platform-based, audience-based, access-based, audience-based sort of monetization. No one was entitled to anything, right? You had to grow and establish an audience, right? And get there. Now, what I would argue, Ken, is probably the rate of change is probably the more important and interesting thing to understand, right? So yes, 40% of creators are earning over 20K annually from 4 years. But for example, is it a 3-year wind up? And then like in the last year, you suddenly got in there, right? Or what may it be? Now, a lot of these folks are not full-time though, right? They haven't transitioned. So like, what's a good side gig? Is 20K a year as a side gig good? Probably.
I would say right? That would be fair. Yeah. Oh, that would,
so I
that
think
would
like,
be a good deal,
it's like, it's framing it like, is this their job? Like, okay, it's a really terrible income, like as a job. It's okay as a side gig, right? And also like, what's that rate of change, right? So I think, and for example, all this money is just going in, right? So it's not even deployed. It's not delivering on the value or the promise that it could deliver on yet. But even without it, or with the bare bones versions of this, we're still pushing $100 billion, right? Of revenue to those people.
And this report also has a bunch of has some interesting graphs in here as well, where you look at the amount of, like, for example, this one, of course, as you pointed out, Greg, this number is vastly outdated, as opposed to, this is going off of the 800+ million in venture capital has been given to startups, right? But they've kind of broken it down here. I'm not sure if you can see that, Greg. I can kind of.
Yeah, I can see it.
Okay. So I mean, you look at this, obviously, hundreds of millions of dollars have been put into Series F. Now,
I think that was like Cameo, probably, right?
Right,
like
and
Patreon kind of thing. Yeah,
and that's what I want to point. I was about to highlight is that this is obviously skewed, because if you're talking about startups, you're talking about startups like Zealous or with Koji and those type of, like, that's what I think about with startups. When you talk about with Cameo and Patreon or Clubhouse, those that have seen enormous traction with VCs.
They're in the middle-aged startup part.
Exactly.
Of life, right?
They're not really. Yeah. I'm thinking this when Neoreach or anybody talks about like VC investments, talk about the fledgling companies, the ones that are really struggling to take off or not in the news as often, right? Of course, Patreon's going to be heavily skewed. I mean, this is going to skew any graph, right? And you can look further down here. I mean, they did it by company. With this black line here is obviously Patreon with nearly $160 million, right? Cameo's over here with nearly $100 million, right? And then Substacks was $65 million. Splice has $55 million. But Mighty's here, MBP's there, Linktree's there with 45, United Masters is with 50. But then it's like when you anyone that builds a graph kind of knows, you put in high numbers, you kind of really diminish the smaller ones.
The scale is certainly no, but here's the interesting thing, Ken. I think the more important part, right, is Cameo is $1 billion business. There's only like 30 or 40,000 people on Cameo, right? So of the ecosystem of the universe of people left to be able to make their way towards sort of monetizable path direct. Yesterday I was chatting with Neil and Matt, and we're using this acronym DTA, like direct to audience, right?
Fair.
Right. And I think when you think about DTA style revenue streams, we're still very, very early in that ecosystem, right? Or the evolution of those sources of revenue. And so I think it's $100 billion now with tiny penetration into what's possible, right? Give it 3-5 years, that you're going to put another zero on there, right? And it could be $1 trillion. Some folks estimate it could be $1 trillion business. In maybe 5-10 years. Is it impossible to imagine? No. Is it likely? We'll see.
And this is a glimpse of, for those that are watching now, this is a glimpse of kind of like the startups that they look at. Funny they included YouTube in here. Of all, YouTube hasn't been a startup
thing, right? Where it's Facebook says we're a startup. Shut up, you're not.
No, they're really not. And even they can launch this.
You have lobbyists, okay?
Exactly. Yeah, you're like a $3 trillion company. There's no way, a public company. There's no way you're considered a startup in any way, shape, or form, right? But you see, hey, there's Creator Cash right there. There's Influence.co. Hey Neil, right there. Cameo obviously is in there. Pinterest also is a bit of a stretch in there, even though they're kind of getting more into the creator economy space, more noticeable in the creator economy space.
Koji, by the way, hey,
yeah, Koji's there. Yep. Hey, there's Dimitri. Yeah, Anchor, which are they technically a startup since they got acquired?
Well, also they have platforms in here like TikTok. Why is TikTok in here?
Exactly. United Masters, Linktree, Snapchat. Again, there's a lot of it's Twitter. I mean, so I'd be very interested to kind of hear more about the methodology. And I know that they included their methodology description in this report. So we'll have to take a closer look at that. But of course, they looked at 2,000. They interviewed 2,000 social media creators. With the disclaimer that most of them are Instagram creators, not necessarily those that are audio creators or YouTubers or Twitch streamers and those type of things. But if you want to break down in terms of their earnings income, right? We were talking about how most of them aren't making, significant chunks of change. Nearly half of those that are surveyed said they were making $20,000 annually. So you see here, you kind of like this breakdown, less than 0.5%. According to the survey or this report, is making over $1 million. I mean, that's not really surprising. That you can get the Colin Samirs of the world. You can get,
but is that odd? I mean, how many restaurants make $1 million, right? There's a spectrum, right? So these numbers, I think, the important point. And actually, I want to make sure we get to Joe's.
Yes, I have that slide.
Some other interesting stuff in there, but the ability to do this as a career is the optionality is increasing, I would say, right? And largely because of the platform independence being a good buffer to providing a normalized approach, right? Because otherwise, unless you can get to a large audience quickly, right, it's pretty difficult to succeed in Gen 1, Gen 2, sort of, going back to my mapping, right? The large audience-based things. If to the extent that you are going more the other path, like the entrepreneurial path, you can create and grow a business faster that could sustain you most likely with a much smaller audience. But the tools we're out there. All of us are building tools right now, right? We're doing our best to get out there. to give you the thing. And then the creators need to pour themselves into those tools as well to make them their own, and then figure out how to leverage them and use them and work with their audience to actually get there. But
yeah, I think that what's telling about this is that when you look at like a traditional job, right? Those that are lucky to maybe get like, at least 50K to maybe, hundreds of thousands of dollars, obviously depending on where you live and what you do. I mean, if you equate that with the creator economy based on the survey, nearly 21% say they make between $100,000 to $500,000, right? Mm-hmm. But as we continue this journey and talk and learn more about the creator economy, Greg, as we talk with more creators themselves and we talk with the builders, it'll be I'm very fascinated to hear more in terms of what is it that creators need to do, or what are they looking for in terms of how they can further their growth, and if they choose to make this a full-time job, or even if they want to actually have it be a big part of their supplemental income, how can they get to that 20% of here? I mean, if that's something they really want to do.
Look, to be fair, Ken, not everybody wants to do this full time.
Oh, no, that's true. Absolutely.
Right? Some people just like doing it because they enjoy it, and they do it as a hobby, and they do that. They document their hobby, say, sometimes, right? And that's reasonable. Nothing unfair about that. For sure. But hot off the presses, though, we do this Neoreach report is a little older, but we do have this just came out, I think, yesterday or today.
It was published. Yeah, published yesterday.
Yep. So Joe just did this amazing new bit of research. I'm going to be using his term because I do like it. Content entrepreneurs. In case you don't know, Joe also used to run the, I hope I'm remembering right, Content Marketing World, which is where I remember meeting him in person the last time several years ago. And now he also runs the Tilt. He's has his own coin. We should get him on the show, obviously.
Absolutely.
So he's got his own rally coin if you are a supporter of those ecosystems. I'm a big fan of Joe's work and everything he's done. But he did do this survey of what he calls content entrepreneurs. And where's that quote where he defines them, Ken? I think it's in that first paragraph. If you go up a little bit. But he says that they are people who primarily are people driving the creator economy.
Well, he's talking about, like, right here in the section literally titled "Who are entrepreneurs?" And I'll go blow this up a little bit more here. Content entrepreneurs build businesses. They do it with a singular focus, growing and monetizing their audience by filling a specific informational need. And he equates them to a media company. Yeah. Mm-hmm. And so we're talking about with Neoreach with their survey. So let's look at Joe's results here. So most of them are in the Gen X. I think actually most of them are Gen X or the so-called Boomer generation, right? I mean, in terms of like 63% of those that he surveyed. So yeah. It's whatever you thought about from a creator and influencer being younger. That's not necessarily the case, right? Your stereotypes are blown out of proportion.
Here's the thing. I would say creators probably do skew younger, but this breed of creator, the content entrepreneur, it's like sort of like from what we were talking about, Antonio, on Wednesday, that frame and that mindset that I am an entrepreneur as I'm starting, right? Which I think, and a founder, ultimately, I think if people can adopt that mentality, it probably does skew older. And the opportunity here is to make that 5% the bigger part of this equation, right? Like, because there's so many more in there. 5% is 5% of a much larger number, most likely, right? But also if we can get that to 10, 20, 30%, that's going to be really, really interesting. And another interesting stat here, by the way, is that the split between full and part-time, kind of to our earlier point, is about half and half.
Right. But fascinating that you bring that up in terms of the content entrepreneurs, like there's different mindsets, obviously, when you look at the Neoreach and obviously with Joe's with the Tilt study here, because you're talking about content entrepreneurs and they're equivalent to they're basically people that want to start, creators that want to start businesses. They're almost like media companies. The mindset of the young people may not necessarily be focused on, hey, this is how I want to strategize my creator career, if you will, right? But those that may be older are like, okay, I've been around, I've been in the world for a while. Let me kind of set this up.
he has some other stats here that I think speak to what you're describing. And I think, I don't know if I agree. I guess my point is that why they're doing it, right? And like these attributes are shared by many in the younger generations. I think they just haven't latched on yet to the idea that they are found, right? This is what we were talking about, Antonio, and sort of our recurring theme, it feels. But it's appreciating that what you are doing now for the people who want to, right? Like not like the goal here again, not to make everybody fit into that bucket, right? But for everyone who are doing it because you want it as a side gig or you run it as a career, you do need to adopt this mentality more and more, I think, to be successful, right? But look, independence, 78% of reasons that people say they want to do this, right, is independence, right? And then right below it, though, is pursuing my passions, right? 73%, almost is at the same level, is like flexible work hours, right? So these are all really powerful things that these are not entitlements. These are things that you can build and seek out for yourself, right? This is very different than saying like, why aren't I getting paid more by the platforms? No, you have to earn your way into that as a business person, right? Who does and executes, right? Like who plans and executes, right? To build those opportunities and create those outcomes.
And funny, there's like 43% say that they're content entrepreneur because they want to earn more than a traditional job.
Very interesting, because previously, you would never have assumed like, oh, Hugo just had a tweet about this. Like, if you said you were a YouTuber, so people would laugh at you, right? Like, if you said that was your career. What else we got in here?
Yep. So nearly 9 out of 10, which we were talking about earlier. So here we go, talking about how do content entrepreneurs actually grow their audience, right? And obviously SEO, search engine optimization, plays a big part. I mean, Google is dominant in all forms. I mean, if you talk about how you hate Google's like algorithm, blah, 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 their search engine is probably the main driver of traffic and awareness for everyone on the internet. Hashtags apparently are still cool at 48%. If Chris Messina had kind of found a way to monetize that as the guy that kind of came up with it.
He does have the hash coin. So if you want to support Chris's innovation, by all means.
Partnering with creators or entrepreneurs, 44% coming in as third place. But social media advertising are obviously advertising is always going to be big. Although I'm kind of surprised that it is in fourth at 43%. And speaking events at 40%. Although in this kind of climate and the current state of affairs, will that decrease? I don't know.
This is not surprising though, right? If you quote unquote sort of define yourself as a content entrepreneur, then the things related to content. The interesting thing to me, right, is that a lot of the other bubbles, right? If you look at them, they bucket up, right? Like, because the secondary bucket is leveraging your expertise, right? So speaking events, that's taking your expertise and basically renting it, right? Creating content for third-party sites, same thing, right? Partnering with brands, I also consider like a little bit of a hybrid, but also partially leveraging your expertise for brands and lending them that, right? And then there's the diversity of the data side, right? Like, so, like audience surveys, great. Like that's power. That like giveaways, that's power. Like those kinds of active engagements, really, really powerful.
But that's a very small part, especially the same thing with like
the gated premium content. Because here's the thing, like I said, the tools don't exist. And also more importantly, the mindset hasn't often existed. Like brands just don't think I should come to you to do market research. They say, I should come to you to like spread some message or to create a piece of content for me. That's why the 3 to 5 years that we often talk about for why and where this business is moving towards, it's not a reality yet, right? Because we still need to like actually get to there. Let's look at this one last chart, and then because we're just about at time.
Yep. So talking about monetization, right? We're talking about how are you making money from your content? And Greg, we talked about this when we covered news weeks ago and talking about how whether it's Nas Academy or this startup's doing focusing on helping other creators teach how to be creators. Online courses actually have wound up being the most profitable opportunity for content entrepreneurs, for CEs, if you will, right? At 16, although when you look at the 10 or so listings here, like it's still, it does make more
16%.
16%, right? Yeah. I mean, so there's a whole, like a lot of this other stuff that makes up, you know, the remaining, I don't know how much, but like that are very much hidden, that are less than 3%. So
Yeah.
that'd be very fascinating to see what that would be. But that's not to, I mean, that's suggesting that there's a lot of opportunity to monetize.
But to our point of the DTA, right? Like these direct to audience sort of opportunities, right? Like membership still very low. Like all of these are fairly low, right? And I think all it means is that there's still a lot of room to grow and change in this space, and that's probably what we need to continue to be focused on.
Yep.
So with that, I know there's never enough time, and I let's try to get Joe on.
Yes.
And dive in and speak to this a little bit further, I think. But thank you for joining us this week. It's been a pleasure. We do have a lot more great program coming up. A small programming change. Jim Lauterbach had a conflict, so we had to move him. He'll be back on September 8th, I believe, Ken.
Yes, we're working to confirm that, but Jim Lauterbach from VidCon will be on the show. We just got to confirm this stuff.
But it won't be on August 11th. By the way, next week we are off. We're taking a well-deserved vacation. I'm going to make Ken work. I'm just going on vacation, actually.
As typical.
August 18th, we have our good friend James Hicks. He'll be back with us to talk about all the evolutions and changes he's been working on. Then we have our... So next week, August 11th, we will have Heather Ramirez. Very excited to have her from Just Create. Runs a number of channels, works and speaks a lot about creator economics as well. So we're happy to have her. She's a creator and works with creators to help them become better businesses. So I'm excited for that. If you want to be our guest, head over to createdeconomy.com. There's a link at the top where you can apply to be a guest of the show. We'd love to have you as well. So feel free to head over there. And so with that, thank you so much for joining us this week. We'll see you in 2 weeks, basically back here for the show. But if you have new news articles or things you think we should cover for our deep dives, send them over to us. We can be reached almost everywhere. You know how to find us. So Ken, with that, I'll say goodbye.
Goodbye. Have a great weekend. Thank you, everyone, for joining us.
All right, everyone. We'll see you soon. Bye. Where did my mouse go?